presentation. Welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. We're going to be mixing technicals with fundamentals today. In front of your screens, you have your USD's daily chart. All charts to be presented are to be of the same time frame unless otherwise stated. By the way, should you want to have a look at any specific trading instrument, just let us know. If we have time, we can do it today. If not, we can always do it tomorrow. Now, Euro USD's movement is very, very typical. In the following sense, it's the USD's strengthening, which was more than evident over the past 1, 2, 3, 4, 5, 6 days, ended yesterday, or at least has hit a pause button. And it's characteristic that Euro is gaining against the US dollar in today's Asian and European session. It's going to be interesting to see whether that tendency will be maintained in the American opening today as well. For the time being, we see an interruption of the downward motion, and that's being evident as the price action is practically testing the downward trend line. It's about to break it. On the other hand, though, I would be noting that the RSI indicator, despite correcting a bit higher, remains still between the readings of 50 and 30, implying that there may still be a bearish predisposition of the market for the pair. Now, should the bulls maintain control in Euro USD, then I would expect the pair to rise, breach above the 1.10 resistance line, and start aiming for the 1.1110. On the flip side, the whole thing could be just a correction higher and not a change of trend. And that's understandable in the sense that the price action halted its drop after hitting on the lower Bollinger Band. You can see it right here, how the price action hit on the lower Bollinger Band and stabilized, and now it's correcting higher. Now, should today's rise be a mere correction higher, then I would expect more or less the downward trend line guiding the pair to be shifted a little bit to the right, and the bears renew their control over the pair's direction. In that case, we may see the S1 1.0915 becoming a target and start aiming for the 1.0790. Now, in Euro's fundamentals, I wouldn't say fundamentals, one interesting element which we had was that we had Germany's industrial output growth rate, which accelerated beyond market expectations. Trading-wise, there was no major market reaction on the release. Let's have a look at that. I'm drilling into the 1-minute chart. And let's see the market reaction at the time of the release of Germany's manufacturing output growth rate. Give me a sec. Here you go. You can see how the price action of Euro USD rose. It rose about 4 pips. Practically the rise was there, but it was immaterial. Macroeconomically, though, it's a positive. And I'm highlighting this because Germany isn't the focus of Euro traders, given that it could be considered more or less the locomotive, the economic powerhouse of the Eurozone. So I wouldn't say every detail, but definitely the industrial output is an issue. Now, on a technical level, I would expect the bearish movement to be renewed. And I'm basing this practically on 2 elements. The one we have already mentioned is the RSI indicator. The second is the fact that the double M formation, you can see it rising. Sorry, the M formation, double top, one top correction lower, neckline, second top, correction lower, and the breaking of the neckline. So I wouldn't be surprised to see the price action renewing its downward motion, falling, breaking the 1.0915 and start aiming for the S2 1.0790. In my opinion, should the pair be able to breach above the 1.10, then that could be signaling an end to the M formation, while on the flip side, should the R1 be able to withhold the upward motion and pressure, the bullish pressure of the pair today, then we may see a renewal of the downward motion and the pair starting to aim for the 1.0790. Let's have a look at USD JPY. Similarly, but in the reverse, we have seen USD JPY rising over the 1, 2, 3, 4, 5 days, stabilizing and correcting lower, falling just short before testing the 149.35. The bullish sentiment is fading away. I wouldn't say fading away, sorry. I think easing. The bullish sentiment is easing for the pair. And I think that's obvious given that the RSI indicator has corrected from the highs of 64.8 to 60.6. So there was a correction lower and easing of the bullish sentiment. In my opinion, though, the correction may prove to be temporary. The correction lower occurred once the price action breached the upper Bollinger Band. You can see it right here. So it was a bit out of the chart. So correction lower was expected. On the other hand, the upward trend line remains intact. I would require the pair to breach below the S1 and the pre-mentioned upward trend line before switching my bullish outlook. I would expect the price action to be reigned by the bulls once again. And for bullish outlook to happen, though, I would require the pair to form a higher peak than this one. So the price action has to reverse the losses, rise, breach the 149.35, and form the higher peak above the R1. Mind you that the next resistance level noted beyond the R1, which practically rests on this peak here, and was also a former support line. You can see it right here. Now above the R1, we set our next possible target for the bulls at the R2 151.88. A level which provided some resistance back in the day. It was actually the upper boundary of the pair sideways movement around mid to end of March, while it provided support also here and here. Now, on a fundamental level, in my opinion, the main element which is driving JPY, and actually it's driving JPY lower or is weighing on JPY, would be BOJ's difficulty on a political level to actually proceed with more rate hikes and further normalize its monetary policy. One could also mention the possibility of safe haven flows, but in my opinion, despite the general unrest and uncertainty in the market, that was not exactly reflected on JPY over the past 1 week or so. So I see the driver of JPY being primarily in BOJ's monetary policy, and at the current stage, USD JPY is driven mostly by the US dollar rather than JPY. Nevertheless, should the bulls take over, I would expect the pair to rise, break the R149.35, and set the next possible target for the bulls at the 151.88. On the flip side, for a bearish outlook, I would require the pair to drop, break the 146.85, break the pre-mentioned upward trend line, and start aiming for the 143.45. If one should be a little bit more conservative, I would wait out until the pair also breaks below the S2. Let's have a look at cable. There we go. This is the daily chart. Once again, the daily chart more or less tends to show a slight correction or slight stabilization. That's more result of, I wouldn't say USD weakness, but sorry, USD strength, but definitely the dollar is struggling right now. Sorry. The downward motion, in my opinion, as it's described by the downward trend line, tends to remain, but there is some difficulty for the price action to actually hit on the S1 1.3030 and actually break it. That would be a prerequisite for a bearish outlook to be maintained. If that's not going to happen, then we may see the price action stabilizing, breaking the pre-mentioned downward trend line, signaling the end of the downward motion, and possibly roaming between the R1 and the S1. Let's have a look at USD CAD. Now, USD CAD is an interesting pair in the sense that it continues to rise. And it's an exception which we can see across commodity currencies. You will see that USD CAD is strengthening against the USD strengthening against the Canadian dollar, but it's also strengthening against the Aussie and the Kiwi. And we'll see that later on as well. Especially about the Kiwi, we're going to be making substantial stop. So the bullish outlook is still present and it's clear. It's supported by an upward trend line, which the price action has diverged significantly. It's characteristic that the upper boundary of the past sideways motion was clearly broken. I would be even adding here that the R1 has been used as a support line, so that provides us with all the necessary grounds to actually switch the role of the R1 1.3610 from a resistance line to a support line. Let's go hunting for a new ultimate resistance level. Definitely this peak cannot be neglected. A little bit narrow, but still. And that's the 1.3945. Locking it in, widening the chart. Let's replace the labels, starting with the R3 being placed now at 1.3945 as we have mentioned. 100 pips lower, we have the 1.3845, which is the R2. 125 pips lower, we have the 1.3720, which is the R1, the new R1. The S1 being set at 1.3610, and the S2 being set at the 1.3425. Last but not least, the S3 at 1.3342. There you go. Locking everything in. Bullish outlook in sight. And the price action may be aiming, or at least has opened the gates for the 1.3720. The bullish outlook is also supported by the RSI indicator, which is clearly on the rise, breaching above the reading of 50, aiming for the reading of 70. There is no dent here. So I would expect the upward motion to be maintained. One small word of caution here. See how the price action is nearing the upper Bollinger Band, which tends to imply that the bulls have only limited space to play and may slow down a bit. But nevertheless, next target for the bulls is being set at the 1.3720. Let's have a look at AUD/USD. It's exactly the contrarian picture if compared to USD/CAD. And in my opinion, that tends to be highlighting the strengthening of the USD against the Aussie as well. Give me a sec, sorry, one mistake here. This is the Kiwi. And we're going back to the Aussie. Yeah. So we tend to maintain a bearish outlook. Allow me to draw also a downward trend line here. However, I would be preferring to draw the downward trend line in the 1 hour chart. And we can see how, let's widen this. Okay, this is clear now. We can see how the price action's downward motion has intensified. The slope has steepened. And here it is. And if we go even further back, here. So you had, after the upward movement, a peak roughly around the 0.6930, actually a little bit higher, 6940. Could correct that. Yep. Then it was all the way downhill for AUD/USD since then. However, the downward motion steepened even more practically since the 2nd of October and once again since the 4th of October. So if we're drilling to the daily chart, we'll get a picture like this. So we tend to maintain our bearish outlook, given also that the RSI indicator has broke below the reading of 50 and is now aiming for the reading of 30. We expect that the price action's downward motion is to be breaking the S1 0.6705, if not today then tomorrow. And next possible stop for the bears, one could add some mid-level around this true here. But I'm going all the way down and I'm preferring this one. So in that case, next possible stop is being set at 0.6570. Now let's move to the Kiwi. A very steep downward motion. I'm a bit worried about that. On the one hand, the downward motion on a technical level is very steep, and at some point it will have to correct a bit higher before it continues even lower. But I have to note here that the RSI indicator below of our daily chart is at the reading of 39.6, practically at 40, implying a strong bearish sentiment, which still has some way to go before reaching oversold levels. So that's a positive for the bears. Also note that the price action, has been falling, but it's still a bit above the lower Bollinger Band, which may also allow some more room for the bears to play. And I would be highlighting here on a fundamental level the release of RBNZ's interest rate decision tomorrow during the Asian session from New Zealand. Now the bank is widely expected to cut rates by 50 basis points tomorrow. And it's characteristic that NZD-OIS imply probability of almost 100% for such a scenario to materialize. That would imply more or less that the bank is, or if you prefer, the market has priced in fully such a double rate cut. At this point, it would be also interesting to note about the market's expectations that the market expects the bank to proceed with another double rate cut in its next meeting. Now, this scenario has not been fully priced in, also widely being priced in, but NZD-OIS implies that it's the most probable scenario right now. So we have to face RBNZ's interest rate decision as a trading opportunity in two stages. The first stage is, will the bank actually deliver the 50 basis points rate cut or not? Should the bank actually deliver a 50 basis points rate cut, a 25 basis points rate cut instead of the 50, expect the Kiwi to get asymmetric support. In my opinion, given the market expectations right now, such a scenario would be an extremely bullish scenario for the Kiwi. Should the bank, on the other hand, deliver a 50 basis points rate cut as expected, then we turn our attention towards the accompanying statement and the bank's forward guidance. Now, should the forward guidance in the second scenario be including more or less some hesitancy towards the extent of the next rate cut, implying that the next rate cut may be less than 50 basis points, that could also provide support for the Kiwi. And in my opinion, that would force practically the market to readjust its expectations about the next meeting and reposition itself. So expect that should the bank cut rates by 50 basis points, yet in the accompanying statement signal that it will be making more rate cuts, but not as extensive as the market expects, be prepared for the Kiwi to get some support. Last scenario would be bank delivers the 50 basis points rate cut, and in the accompanying statement, the forward guidance more or less signals that it's ready to proceed with another 50 basis points rate cut in the following meeting. That could weigh on the Kiwi somewhat, as practically that would be further indications about, or if you prefer, a reassurance of the market's expectations for the bank's dovish path. Now, should we see a bullish surprise, I wouldn't be surprised to see the price action of NZD-USD reversing direction, regaining the losses of yesterday and today's Asian and early European sessions. And that would mean practically that the price action is going to be reversing course, breaching the R1 0.6150 level, which was broken yesterday, and aim, if not to reach, the R2 0.6215. On the flip side, should the market's extensive dovish expectations be verified, I wouldn't be surprised to see the price action of the Kiwi against the US dollar breaking the S1 0.6105 and start aiming for the S2 0.6045. Okay, let's have a look at CHF as well. And this is the last FX pair. I left USD CHF as a last trading instruments in the FX market I would like to have a look at, and the reason why is because we have some, let me say, doubts about its path. It's a little bit ambiguous. It's characteristic that the price action at some point, that was on Friday, broke above the 0.8555 resistance line. And the movement, you can see it right here, was understandable in the sense that it was expected because of the hotter than expected US employment report, which was released that day. So that movement was okay. That was more or less in line with the data which was released. On Monday, we saw the pair falling and breaking below the S1 0.8555. Sorry, 8550. And that was partially also okay in the sense that there was a correction on Monday across the board for the US dollar. I'm a little bit puzzled in the sense that we see that correction being extended. And when I'm talking about the correction, I'm talking about the correction lower for the USD. That's being extended in other FX pairs, but not against the CHF. Today we can see how USD CHF is rising slightly and putting the 0.8550 back on the test. It's characteristic that the RSI indicator tends to remain near the reading of 50, implying a rather indecisive market. So some stabilization could be in the works. The upward motion was interrupted, as was evident in the past week. And it's characteristic that the upward trend line, which was guiding the pair over the past 7 days, has been breached. So I would expect some stabilization, and I wouldn't be surprised to see CHF revolving its price action around the 0.8550 axis, unless we see some data which could be deciding the direction of the pair's next leg. However, that does not seem to be the case right now. Okay, let's move now to US stock markets. You know what? Before we move to US stock markets, I would like to have a look at commodities and particularly oil. Now, the situation in the Middle East is very fragile. However, look at this. There is a steep correction lower of oil prices, despite being above the 71 threshold. At this point, it would be interesting to reverse the role and turn it into support line. And let's go hunting for a new ultimate resistance level. One could place it on this peak here, not in my opinion. And on the contrary, the R1 is going to be lowered to the peak of today. And let's go further back. This is more evident, this peak here. And that would be in red, the 89.45 resistance line. Readjusting the chart, widening it. 1, 2, 3, 1, 2, 3, yeah. And the R3. Let's correct the labels. Starting with the R3, which is now being placed at 89.45. The R2 at 83.85. The R1 at 77.85, which is also today's peak. The S1 at 71.40. The S2 at 64.60. And the S3 at 57.17. Let me have a recheck on the S3 before we move on, but I think that's pretty much it. Yeah, on this peak here. No, it could go even lower. And here we have it. What about 15? Yep, even better. Readjusting. Locking everything in. That's it. So in my opinion, we intend to maintain a bullish outlook for oil prices on a pure technical level. However, that upward motion outlook is being put to the test as we're speaking. So it's going to be interesting whether the price action will be able to break the prementioned upward trend line. And in that case, that would be signaling or be the first signal of a possible stabilization of oil price on technical level. But I would be also noting that a correction lower could be in the cards anyway for oil prices for WTI. Given that the price action of WTI was able to breach above the upper Bollinger Band, that would be a signal that it's reaching a little bit beyond its grasp, so that's another issue. Also, I would be noting here that the RSI indicator is bad correcting a bit lower, implying an easing of the market's bullishness. It remains pretty high. It's at 59.97, 60 practically, which tends to imply that the bullishness of the market, despite the correction lower, is still there. And the next big question are the fundamentals surrounding the oil market. Definitely, the situation in the US oil market is one question mark, and to that end, I would be urging oil traders to keep an eye out for the release of AP's and EIA's weekly crude oil inventories figure. The demand side from the Chinese, there were no signs of an actual increase for oil demand from China, so that's somewhat subdued. Nothing new came out of OPEC, and right now the main issue surrounding oil prices would be the situation in the Middle East. Let's not forget that we're talking about a very fragile situation. Let's not forget that the Israeli response to the Iranian missile attack is still looming, and there is a possibility that the Israelis are going to be targeting Iranian oil facilities. The question here is whether we are overestimating the role of Iran. And I'm highlighting this as a question mark, in the sense that, okay, we're talking about 2.5, 3 million barrels per day. And I wouldn't be surprised to see Saudi Arabia coming up with the lost quantity should the Iranian oil facilities be hit. On the flip side, there's wide uncertainty about the response, the Iranian response to such a hit, because should it shut down the Straits of Hormuz, there will be a substantial shortage of oil supply in the market, and that could drive the price action substantially higher. I understand the difficulty of Iran actually cutting off the Straits of Hormuz, but even a short-term interruption of oil supply or the threat of such an interruption could push oil prices substantially higher. So it's something which we will have to wait out and see. Last but not least, let me have a look also on gold's price, which has stabilized somewhat. Yep. And be advised that we will be releasing our weekly gold outlook. At this point, allow me to highlight the sideways motion, the downward level of the S1 is being put to the thread. Let's have a little bit more detail here. Allow me to drill into the 1 hour chart, widening it. Okay, that's too much detail. 4 hour chart, that's better. I think this provides us with the clearest picture. And let's reposition the labels. So there is a sideways motion between the R1 and the S1. However, the S1 is being constantly put to the test. Should the S1 be clearly breached and the price action reaches and tests, I'm requiring here that the price action of gold breaks the S1 and reaches or even breaks the S2, then we may be talking about a switch towards a bearish outlook. However, that remains uncertain. Note how narrow the Bollinger Bands are, which tends to imply low volatility for gold's prices, supporting the idea of a continuance of the sideways motion. The RSI indicator has dropped below the reading of 40, it's at 50, it's at 43 right now, which tends to imply that bearish tendencies may be building up among market participants for gold's price. In any case, the upward motion which was evident has been breached, that's clear. However, you have a longer term, if we drill into the daily chart, I think we still have some way to go before we write off the bulls just yet. Anyway, once again, sideways motion bias exists for the time being. However, I am noting the slight bearish tendencies of the precious metal. More on gold and the fundamentals included will be in our weekly gold report due out today. Thank you very much. I hope that you found this report useful. From all of us here at IronFX, best wishes for solid trading.
So welcome to this week's trade management webinar. So today we're going to be talking about trailing stop loss. So as per usual, before we get started, a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie, and I am your host for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. Okay, we will firstly talk about the anatomy of a trade, followed by some recap of last week and the previous week's information, some trade management techniques, just a really brief recap on those. And then we'll jump straight into this week's trailing stop loss techniques. And we'll look at some examples of them as well. And if we have time at the end, we'll also go through a couple of live analysis charts. So feel free to pop into the chat if you have any questions or any requests for any charts that you guys would like to see. Okay. Now let's go ahead and get started. So the anatomy of a trade. Firstly, of course, we have our entry, stop loss, and take profit, and then followed by our break even, partial profit, trading stop, and idea invalidation. So let's look at. I think if you were here at our previous webinars part of this series, you would know that you would know what exactly these break-even partial profit trading stop means, or idea validation rather. But not to worry, if you weren't here, I'll just do a brief recap right now. Okay. Okay, so firstly, let's look at our take profit stop loss placement recap. So we typically would recommend you to place your stop loss beyond a major resistance area and your take profit before a major resistance area. So if you're wondering about this, let me just pull up the Forex Army website so that you guys can see. So if you're new to technical analysis, right? If you're new to technical analysis, you can actually just go to this website. Let me just pop it into the chat in a bit. But go to this website and then you guys can look at all the different Fibonacci techniques. Yeah, here. So we typically would recommend you to place your take profit before a major confluence area and after a major confluence area for your stop loss. So in this case, we are looking at a buy entry. In this example that I have here on my slides, obviously we are talking about a sell entry since our take profit is below instead of above. Okay, so I just wanted to pull this out to show you guys the variations if you're looking at a buy entry versus if you're looking at a sell entry. So maybe I'll just type out the website in the chat. It's theforexarmy.com. Okay. Yeah, you can go ahead and explore that website on your own. And okay, so we went through this in our very first part of the trade management series. Okay, next we're gonna look at break even. So break even is basically a level in which you are in profit and recognize that there is a risk of reversal. So it's basically you saying that if you are right, then your price should go all the way to your target. But if it goes back to your entry, then you are wrong and you should get out. So over here, we have an entry at the breakout. Over here, okay, so we have two multiple swing high resistances, and we're going in for our entry at this breakout of these this resistance level. Okay, so we're hoping for price to push past our take profit, which is over here, the green area here. So we take note of our original stop loss, which is below here at this swing low. Okay, and at point 3, which is over here, that's where our break even was triggered. So it's where our break even is triggered because your break even level, which is typically in between your entry and your take profit level. So we've chosen this area since it's a swing high resistance level. Okay, so we are going in for a buy. We're expecting price to rise from our entry all the way to this level here. Okay, and we see that price has reversed off of our break even, and that's where our break even is triggered. So we are going in and moving our original stop loss over to our entry instead. Okay, so you see me keep constantly looking to the side, it's because my monitor is over here. Okay, but yeah, so our break even is triggered. We are moving our stop loss over to this entry level so that if price continues in our favor, which you see it originally did, okay, it's continued, broke out of the break even resistance level and hit it towards our take profit, then of course that's good news. But if it reverses, you can get out at break even and your position is protected. Okay. Okay, so in our second part of the series, we talked about break even and partial profit. So we just talked about break even. Now let's look at partial profit. So partial profit basically means, as the name implies, you get a partial profit of your trade because the trade perhaps didn't meet your expectations, didn't hit your take profit, but it hit halfway or maybe 3/4 of your trade. So in this example, we are going in for a buy entry at our first support level. Okay, so our first support level is at the 0.68736 level, and our stop loss is placed slightly below that at a overlap support level. As you can see, there is a swing low here and a swing high here. Okay, so we place our stop loss slightly below that, and our take profit is over here at 0.70512, and it's at this swing high resistance. Okay, we have a couple of Fibonacci levels to support our levels as well. So firstly, we have a 61.8% Fibonacci projection. Okay, that lines up with our take profit, but excuse me. But then we also notice that we also have a 78.6% Fibonacci projection and a 38.2% Fibonacci retracement that lines up nicely with our partial profit. So if you're thinking where exactly should you place a partial profit, firstly, you can pick any levels that's in between your first support and take profit. You can look for levels that have a swing low or swing high. That's basically how you identify levels. Okay, that's the first step. Next, you could maybe look at supporting that level with Fibonacci levels like we have done over here. So you can see our partial profits at the swing low level. Okay, but it's also supported with 2 Fibonacci levels, making it a pretty significant Fibonacci confluence area. Okay, so we're expecting price to rise to our take profit, of course, but there is a strong resistance at this Fibonacci confluence area, so that's why we're placing our partial profit there, just in case price isn't strong enough to push past that area. So you can see price testing this area now. Okay, yeah, so you can see price testing that area, and it's reacting off of it, but we're not sure if it's actually gonna surpass that area or break out of that area. Okay, and you can see that it actually reversed off and hit it back down. So we did get out of our trade with a slight partial profit, even though it didn't hit our take profit. Okay. Next, we have idea invalidation. So we went through this last week as the third part of our series. So idea invalidation is usually placed before your stop loss. So it's basically the opposite of your break-even levels. So for break-even, we will move our stop loss to our entry, but in this case, we are moving our take profit to our entry instead. Okay, if I sound a little bit sick, it's because I'm just recovering, so bear with me in that. But okay, so it's the level at which you basically admit that you are wrong and you want to get out of the trade ASAP. So when this level is reached, your take profits move to your entry, giving you a small chance to get out at break even. So in this example, we're looking at your entry at this double swing high level. Okay, we see price dropping, reversing off of that resistance and heading downwards to our take profit. You can see how we've placed our take profit before a major confluence area or major resistance area. As you can see here, we have 3 swing lows. So we're placing our take profit slightly above that. Here we see price reverse and it's heading up towards our stop loss. Okay, so the point in which your idea validation is triggered is at this point. Your idea validation, as we mentioned earlier, is placed in between your stop loss and your entry level. So we've chosen the swing high level here. So once price hits that level, even if it does reverse back down towards your favor, we're moving our take profit upwards to our entry so that we get out of the trade at break even before price rises even further and stops us out. Okay? Okay. Let's look at some examples now. So in this example, we have a swing low here, and we've placed our buy entry at that swing low, and we have a Fibonacci 50% Fibonacci retracement that supports our take profit level. Our take profit level, as you can see here, is an overlap level because we have a swing low and a swing high that line up nicely at that level. Okay. So you can see our entry, yep, so our entry is at that level. And now we are going in with our Fibonacci extensions as well as expansions. So if you're not familiar with what those are, we basically go through those in our Fibonacci series. But you can also check them out on the forexarmy.com, which is the website that I have included in our chat. Okay, but basically you can see how our 127.2 and the minus 27% line up nicely. So I'll show you guys in a little bit during our live analysis session how you can obtain these levels. Okay. Okay, but yeah, for now you just look at these levels, see how they're aligning. That's basically giving us a Fibonacci confluence area. Okay, so yep, so you can see entry and our price. So we're placing our stop loss below our Fibonacci confluence area here. Just like we mentioned, we always want to place our stop loss beyond any confluence areas. Okay. And now our idea validation, we are placing exactly at that level. Okay, so if price breaks out of our entry, hits downwards towards our stop loss, okay, at least during when it hits our idea validation, we will get out at break even. You can see that's exactly what happened over here. Okay. And then once it hits our ideal validation, we then move our take profit down towards our entry. Okay, so that we get out at break even. Okay, that's basically it. Yeah, so if we didn't do that, price would have stopped us out because price actually continued to drop. Okay, so now let's look at this week's topic, which is our trailing stop loss. Okay, so trailing stop loss is basically a type of stop loss order that is set at a certain percentage or dollar amount away from the market price. The idea behind a trailing stop loss is to lock in profits while giving the trade room to breathe, as the stop loss follows the market price as it moves in favor of the trade. So, this example that I have over here is in terms of stock prices. But it's just to give you an idea of how it works. So let's say you buy a stock at $100 and you set a trailing stop loss at $10. As the stock price rises to $110, the stop loss will follow, now at $100, because 110 minus $10. So if the price, if excuse me, if the stock price drops to $100, your stop loss will trigger, selling your position and protecting your profits. The trailing stop loss technique can be useful for traders because it allows them to manage risk and lock in profits dynamically as the market moves. Okay, so this is different from a fixed stop loss, which is set at a specific price and does not change as the market moves. So it's important to note that the trailing stop loss is not a guarantee that you will exit a trade at the desired price. Market conditions such as gaps or rapid price movements can trigger stop loss order before it reaches the desired level, leading to an unexpected exit from the trade. Therefore, it's important to use trailing stop loss in combination with a solid risk management strategy. So if you combine this with all of the methods that we've mentioned above, and throughout the past 3 webinars, you're pretty much set for your trade management strategy. Okay, so here are the different methods of a trading stop loss. You can see we have moving averages, chandelier, parabolic SAR, ATR, so on and so forth. Okay, even support and resistance levels and a combination of these methods. So let's go through our first example, which is the moving average. So in this example, we are going in for sell entry at this level here with a 1.57891 level. Okay, so once price breaks out of that area, then we're going in for a sell. And the reason for that is because you can see that we have an ascending trend line. Okay, so what makes an ascending trend line valid is if there are 3 touches on it. You can see very clearly over here we have 1, 2, and 3. Okay, and on our third point, you can see price breaking out of that ascending trend line and also breaking below that overlap support level. Okay, so it's breaking below it and we're going in for a sell. So you can see here, price has continued to drop. Okay, and price is moving below our moving average, which is typically a sign that a bearish signal. Okay, if price moves below your moving average, it's typically a bearish signal. And once you see price cross over your indicator, that's a sign that that the trend might change, and that's when your trailing stop loss is triggered. Excuse me. Okay, so that got us out of the trade before price started to move upwards. Okay, pretty self-explanatory. Now let's look at a trend line breakout. So we have one trend line here, but we have another one over here, as you can see. Okay, and so price is moving in this descending trend line, and we see price breaking out of our descending trend line. So that's typically a sign that trend is going to change as well, and your trend line trading stop loss is triggered, so you get out of your trade, yeah, of your selling trade. Okay, if we look at our parabolic saw, pretty similar in logic, I guess. In this case, we see price moving below the indicator, so it's also a bearish signal. And then we start to see price giving us this, price moving above our parabolic saw. So it's giving us a bullish signal. And then we see price crossing over our indicator. So then our parabolic saw trading stop loss is triggered. Okay, now if we look at chandelier and ATR trailing stop loss, okay, we have our sell entry at that same spot, okay, and price is moving below these indicators, so it's a bearish signal. And once price crosses over these indicators, our ATR stop is triggered, chandelier stop is triggered, and you get out of the trade. Okay, pretty self-explanatory there. Yeah, so if we combine different indicators, obviously your trailing stop loss will be more effective. So here we see our moving average indicator being used. So price is breaking below our sell entry as well as our moving average. So it's giving us a bearish signal. So we're going in for a buy, or rather for a sell towards our take profit. And you can see we've placed our fixed stop loss over here, right, at this swing high here. Okay, but we're going in for a sell towards our take profit, and once price crosses over the moving average indicator, that's a sign for us to get out of the trade, because it's typically a sign that the trend is changing. Okay, similarly for this example as well. Okay, using breakouts as trading stop loss. So breakouts are usually high volatility events, and price can spike up and reverse almost as quickly. So stop loss will help you to manage risk and protect your capital, and a trailing stop loss can help you to protect your profit. So in this example, we're using chandelier and ATR. Okay, so we see, and we're also using support and resistance here. Okay, so you can see that we're going in for maybe a buy entry here. Okay, so we're seeing price moving above our indicators, which is a bullish signal. Once price kind of starts to cross over each other, that's a sign that the trend is going to change. Similarly, over here, we are using support and resistance to highlight the different levels that we want to pay attention to. And then we're seeing price moving above the indicators. So once again, a bullish signal. And once price crosses below the in this case, it's a resistance. Okay, so once price crosses over this resistance level and it also crosses over our indicator, that's a sign that the trend is about to change. Similarly, for this example, we are using a moving average indicator instead. Okay, but it's the same concept. You see price moving above the indicator, it's a bullish signal. If it's moving below, you can see it's a bearish signal. And if it crosses over, it's typically a sign that that the trend is about to change. Okay, that's about it for my slides. We still have a bit of time left, so we can take a look at some charts. Let me just pull up my charts really quickly. Okay, let's maybe go ahead and look at gold first. Okay, okay, so starting off, we're gonna look at our weekly time frame. Okay, so on our weekly time frame, okay, let me just make sure that okay, okay. So on our weekly time frame, okay, this is what our charts look like. It's pretty bearish, okay. Um, on our daily time frame, also pretty bearish. Okay, now let's look at our 4-hour time frame. Okay, first on our daily time frame, let's add some support and resistance levels. So firstly, this is our first resistance. Okay, and then our first support. And maybe a second support here. Okay, now let's look at our 4-hour time frame. Okay, I think this would be my first support instead now, because it's closer to where price is at. And then this would be my second support. Okay, now let's go in with some Fibonacci levels. Okay, I'm first gonna go in with first gonna go in with a Fibonacci projection. So I have my 61.8% that lines up nicely with my first resistance. Okay, and next let's go in with a retracement. So my 38.2 lines up nicely with my 61.8. Okay, and over here I can see this level, 50% lines up with the 23.6. So I'm just gonna keep those two as well. Okay, so I'm actually gonna add a level here because this is an intermediate level. Okay, because I have Fibonacci confluence area here, and I also have some swing highs over here. Okay, now let's go in with some indicators. Okay, price is moving above our Ichimoku cloud, so it doesn't support our bearish analysis, but on our MACD it is bearish. So I'll just get rid of our Ichimoku. Now let's look at RSI. Okay, RSI isn't telling us much. Let's look at stochastic. Okay, on our stochastic, we are seeing a bearish divergence. Okay, so between these two lines, you can see price is pretty price has stayed the same level at our first support, but on our stochastic, okay, it gives us a price is making a lower low. Okay, so that's a bearish divergence. Now let's look at moving averages. Let's look at MA, simple, and exponential. Okay, price is moving below both of these indicators, though it does look like price is breaking out of our EMA or SMA. So I might remove that. Okay, because it doesn't support our analysis. Okay, that's about it for our dollar franc. Okay, so we will definitely see price um testing this level a bit. Okay, we'll see price testing this level because of the confluence area as well as the overlap levels. But yep, I think ultimately it will continue in the downward because of the downward pressure. Okay. Okay. I think we still have a bit of time left, so let's look at gold. Okay. Same thing, we're gonna look at the higher time frames first. Yep, I think this because this webinar is being recorded, so I think they will upload this onto YouTube. So I think you will be able to get it there. But if not, I think you can email the IronFX team and they'll be happy to help you out. But it is being recorded, so you should be on YouTube. Okay, so on our weekly time frames, we can see it's pretty bullish, right? On our daily time frame, okay, on our daily time frame, we can't really tell because it's kind of trending. Okay, now let's just go in with our support and resistance levels first. Okay, and for my first support, maybe here. Okay, and okay, now on our 4-hour time frame, okay, most of these levels still hold up on our 4-hour time frame. But I think instead, I want to place my first support here instead. Okay. Second resistance, maybe here. Okay, now let's go in with our Fibonacci levels again. So I can see my 78.6 lines up nicely. I want to see if my 61.8 lines up with any other important Fibonacci levels. Okay, so I will test that in a bit. Now let's look at projection. So I have 61.8. Okay, all of these levels price has already broken out of, so that's no longer valid. Um, mm, so I think that's all the levels that we have. Okay, my 61.8 lines up nicely, and my 50% as well. Okay, that's all the levels that we have here. I'm actually going to remove the 61.8 because can't find any other levels to match up with that, as well as our 50%. Okay, now let's go in with our indicators. I'm going to use MACD, Ichimoku, and RSI again, because at one glance you can see exactly what the signals are. So on our Ichimoku, you can see that price is moving below the Ichimoku cloud, so it's giving us a bearish signal. On our MACD, you can see it is giving us a bit of a bullish signal, so I'm just going to remove that. Okay, on our RSI, okay, price is actually giving us a bullish signal here. Okay, because it is breaking out of the descending trend over here. So I'm gonna move that. Let's see. Ooh, let's look at moving averages. Okay, price is moving below both of the moving averages, so it supports our bearish signals. And let's look at Bollinger Bands. Okay, Bollinger Bands aren't really telling us much, so I move that. Okay, let's look at stochastic. Okay, stochastic gives us a descending trend line, so that also supports our bearish signal. Okay, so because there are so many indicators, it's important to just pick a couple that you are comfortable using and that you know how to use properly. Yep, and then just flip through those few after you're done doing your Fibonacci as well as graphical analysis. And then, yeah, just go from there. So if majority of your chosen indicators give you an opposite signal of what you are going for, then maybe you can go back and check your analysis again. But normally, if you've done it properly, most should support your own analysis. Maybe not all, like you've seen over here, RSI and MACD didn't support this analysis, but you can see that my stochastic, my moving averages, as well as my Ichimoku all support my analysis. So yeah, let me know if you guys have any other questions. Okay, if there are no other questions, that's it from me for today. Thank you guys so much for joining me. I am so sorry for my voice. Um, I'm just recovering from the flu, but I will be better next week, hopefully. And I'll see you guys then. Have a great rest of your week, everyone. Bye. No worries. I'm sure I'll be better by next week. Thank you. Bye, guys.